The Indian economy has exhibited remarkable resilience through 2020. In the face of the deteriorating global situation triggered by Russia-Ukraine war, monetary policy tightening, and recurring waves of the pandemic, on the back of strong economic fundamentals, we are in a position to come back. An important factor in the overall outcome has been the measured response of monetary and fiscal policies, in sharp contrast to the aggressive tightening worldwide. The, the new year brings hopes for continued momentum in India's growth story, backed by the sustained strength in domestic demand. The World Bank has gone on record to say that the nation was well placed to steer through any potential global headwinds in 2023. The IMF has also said that India remains a bright spot and would account for a significant portion of the global growth 2023. Several high frequency activity indicators like vehicle sales, petroleum consumption, railway passenger traffic, air traffic, RTO revenue collections, fertilizer sales have all shown improved YOY momentum in quarter 3 of financial year 23. GST revenue also continued to remain robust with 15% higher revenues in quarter 3 of financial year 23 compared to the same period last year. In financial year 23, credit growth has continued to grow in double digits. The incremental 9-month credit growth has doubled in financial year 23 compared to financial year 22. Credit growth in the system is currently at about 15% as against 9% in last year. The good thing is that credit growth is broad-based and not limited to a few industries or sector. So we expect the pace to continue in the next financial year also, but some moderation may happen. At State Bank of India, we have always maintained that our long-term strategy is to build sufficient resilience in our balance sheet. So while we continue to pursue growth in core operating incomes, we have also been proactive in identifying any potential risk and build adequate provisions for the same. And our operating results for the quarter are aligned with our long-term strategy. I'm pleased to announce that for the second quarter in running, we have again posted our highest ever quarterly profit at rupees 14,205 crores. Our business growth numbers are strong, and in terms of asset quality, our gross NPA numbers have dropped to its lowest level in more than 6 years. Let me now give some color to bank's numbers for the quarter. Net profit for the quarter increased by more than 68% YOY to 14,205 crores, while operating profit at rupees 25,219 crores increased by 36%. ROA of the bank for the 9 months period improved by 23 basis points on YOY basis to 0.87%, and ROE improved by 458 basis points on a YOY basis to 18.59%. Most other core profitability metrics have also improved over previous year as well as sequentially. Net interest income increased by 24.05% YOY on the back of improvement in yields and continuing credit offtake. Domestic NIM also improved by 29 basis points YOY and 14 basis points sequentially. Non-interest income grew by 32.22% YOY. Operating expenses increased by 16.69% YOY as we have started building provisions for the wage revision, which has fallen due from November 2022. Other than that, our overhead expenses as well as staff costs are within control, and our cost to asset continues to remain among the lowest in the industry, reflecting our efforts to build long-term cost efficiencies. On the business front, the growth momentum in domestic credit offtake has continued in this quarter also, with growth coming from all the segments. Domestic advances grew by 16.91% YOY, headlined by retail personal advances, which grew by 18%, which grew by 18%. SME and agri advances also posted the double-digit growth at 11.52% and 14.16%. Our personal retail loan book, excluding housing segment, has crossed the milestone of 5 trillion. Domestic deposits grew by almost 8.86% YOY, driven by growth in savings bank and term deposit. Our foreign offices have continued to perform well with good growth in advances as well as deposits. As far as the asset quality is concerned, we continue to post improving outcomes. Our gross NPA has dropped below rupees 1 lakh crore and stands at rupees 98,347 crore. In terms of the ratio, our GNPA ratio has come down by 136 basis points YOY and stands at 3.14%. Our net NPA ratio has also declined by 57 basis points and stands at 0.77%. Slippage ratio for the quarter stands at 0.41%. The consistently improving asset quality is also reflected in our credit cost, which is at 21 basis points for the quarter and is down by 28 basis points YOY. On the restructuring front, our total exposure under COVID Resolution Plan 1 and 2 stands at 26,035 crores as at the end of quarter 3 of financial year 23. The restructuring book has behaved well, with almost about 10% of the exposure falling under SMA 1 and SMA 2 category. We are holding sufficient additional provision against the restructured account. As you might recall, we are holding almost about 30% provision, but we are quite hopeful that the kind of NPAs which we have seen in this book, which is somewhere around 2%, we should be in a position to ensure that we don't have any challenge coming from this book. The bank remains very well capitalized, and we expect that our internal accruals will be adequate to take care of the normal business growth requirements. Our capital adequacy ratio, without adding the profit for the 9 months, at 13.27% and CET ratio at 9.26%, are well above the regulatory requirement. Digital continues to be an important acquisition engine for the bank across assets as well as liability products. During the quarter, we have sourced 64% of our savings accounts and 41% of the retail asset accounts digitally through YONO. Our subsidiaries have also consistently performed well and continued to create significant value for all the stakeholders and, most importantly, for the customers. Most of our subsidiaries are leaders in their respective segments. We will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders of SBI. Now, before I conclude, I thank you all for your continuous support to the bank. We consider it a privilege to be able to contribute towards the growth of our economy. We remain committed to reward your trust in us with superior sustained returns over the long term. I wish everyone here good health and a happy weekend. The floor is now open for your questions. Thank you.
Thank you so much, sir. Now we'd like to move to the media Q&A. I request the media to raise their hands and unmute themselves when called upon. As always, given the time constraint, we request you to follow the format of asking 2 questions each related to the results. The first question is from Ankur Mishra of ET Now. Ankur, please go ahead. Ankur, can you hear us?
Hello. Am I audible now?
Yep, please go ahead.
Yes. Hi, sir. So my question is regarding the credit growth. Now, 2 quarters in a row, you have clocked in a decent growth. Last time you said that there is some scope for revision in the credit growth target for the financial year. I mean, that currently is. So do you think that, what is your credit growth target till March end?
I think last quarter also I had indicated that we expect that the growth will be somewhere between 14 to 16%, and I maintain that kind of a number. We expect to grow about 14 to 16%.
Okay. Also, how should one read into the provisions coming down, especially loan loss provisions, which is again less than the what market expectation was?
Well, of course, part of it is attributed to, we are not left out with much of stock as far as the stressed loans are concerned. As you would have observed, our NPA has come down to less than 100,000 crore, 1 trillion. It is now at about 98,000 crore. So that is one of the reasons why we are not required to make as much of provision. And it is also attributed to the better underwriting practices which we have adopted, which ensures that we should be in a position to keep adequate control on any of the stress which might be seen. And as a prudent practice, as and when we get to see some stress, we rather provide for it upfront as against waiting for the event to occur. So I would say that part of it is also our own our strong underwriting practices, and part of it comes from the ecosystem as well.
Last question will be there on CASA ratio, which is on decline. What has been the reason for that? And overall, the deposits growth compared to credit growth is a little muted. So what is your comment on that?
Yeah, deposit growth, I think in the system as a whole, we have seen for the banking system, we have seen lower growth. So I think it is essentially in line with what is happening in the industry. Of course, when it comes to savings bank deposit, in terms of number of accounts which are opening, they are pretty large in number, and I expect that with some kind of a liquidity easing in the system, perhaps we'll have a situation where this growth will also grow up. It will go up, and as of now, we are comfortably placed to ensure that we should be in a position to support the balance sheet growth as far as the loan book is concerned.
Thank you so much, Ankur. So the next question is from Ritu Singh of CNBC TV 18. Ritu, please go ahead.
Mr. Khara, first, you've given us your guidance on credit, growth, but what about asset quality? We've seen that improvement quarter on quarter for the last few quarters. Now your net NPAs also are at less than 1%. What could you tell us now that we're closing the financial year in this quarter? What would the asset quality look like? That's the first question. Where the slippages also came from. I know they've come down to about 3,000 odd crores in this quarter. And secondly, since you're the largest lender to Adani Group, while we read your statements that the exposure is within the large exposure framework limits, could you tell us more about what the absolute quantum is? If there's any sort of concern there, if you've increased provisions or will look to increase provisions because of what's been happening, with the stocks in the last few days?
Well, Ritu, two questions which you have asked. I will answer the first question in terms of how the asset book look like. I expect our effort and endeavor would be to keep the credit cost as low as possible. And the kind of trend which you have seen for the past 2 quarters, our endeavor would be to keep the credit costs around the same levels. But also, I think I'm a bit bullish in terms of how the economy looks like. So that is one of the reasons why perhaps in the near term, in this quarter, perhaps we should be in a position to see that kind of a credit cost. And the quality of assets, I don't envisage any challenge in the quality of assets. Your second question in terms of exposure to Adani, we have lent to Adani for projects which are in fact having tangible assets and which are having adequate cash generation, and they have been in a position to meet their obligations. And as far as the quantum is concerned, that is actually just about 0.8, 0.9% of our total loan book. So from that point of view, we don't envisage any kind of a challenge in terms of their ability to service the loan obligations which they have taken. So, and also we have not extended any loan against shares, etc. There is no such portfolio which we have. So the impact of the stock market prices of the stocks will not really impact any of the margin calls, etc., and any of the loans which they have raised from us. As I mentioned, that it is all against assets which are cash generating and which are having excellent track record in terms of the repayment in the past.
So if you could actually elaborate, 0.9% of SBI's loan book is the total quantum of your exposure to Adani. If
Yeah,
you could give us the
outstanding
absolute
exposure,
figures in terms of
outstanding
what is the
exposure is point
fund-based
0.9.
and
Sorry.
non-fund-based exposure in total to Adani.
Yeah, it is all. It is everything put together.
So if you could give us the breakup.
And also when it comes to non-fund based exposure, I think non-fund based exposure, I would only like to mention that they are essentially letter of credit and the bank guarantees, and these bank guarantees are the performance bank guarantees. And this is not against any of the equity raising or any such activity. We actually, breakup wise, maybe Swami, would you like to add something? If at all you have, or maybe you can.
Debt from us, and including a small investment of about 285 crores. So in all, the exposure total is about 0.88% as on 31st December. And as you clarified, sir, there is nothing which is against acquisition or against shares in this. Ritu, if you require any other granular data point that we can share offline with you.
In fact, we have not issued any guarantee towards securing any of the financial obligations or acquisitions either. So as I mentioned, that these are all performance guarantees or the financial guarantees, but done and which are required in the normal course of business. And there is nothing which we have done which can cause a concern for us.
Thank you, Ritu. So the next question is from Mr. Abhijit Lele of the Business Standard. Abhijit, please go ahead.
Good evening, sir. Staying on the Adani, what we are discussing or what you're giving is the situation as of now. But they have a huge pipeline of projects that have been sanctioned. The credit is there. So when you are actually releasing the money for the sanctioned credit, are you increasing your information requirement or doing more due diligence? Is there any shift to safeguard future interest? What you have
See, when
spoken
it
is
comes
still now what is
to
it is.
when it comes to project which have been sanctioned, there is a requirement for bringing equity upfront, and that is something which will be always insisted upon. And unless and until equity is seen, the debt amount is not released. So that is something how the project financing goes. So I think on that particular count also, as of now, the kind of projects which have been where we have granted the facilities, they are the one where already the equity is already seen. It is not that we are waiting for some equity. So, but as far as going forward, each of the project, each of the of such proposal will be evaluated on its own merit. So, and also it is a discussion which is vested with the credit committees and also the sanctioning authorities. So everybody will be very mindful about what the situations are, and accordingly decisions are taken.
Have you also done any kind of have they started any interaction to give you some kind of confidence? What you have spoken is about your exposures and all, but there is much more to it than just the balance sheet. There is much more in terms of what events are happening, what events might happen to them. So have they begun any conversation to give you the confidence?
No, as of now, it's a normal course of things which we are doing, but any special engagement we have not yet started. If need be, we will engage with them. But as of now, as I mentioned, that lending which we have done, it is against the projects which are having adequate cash generation. So for us, for the time being, there is no concern.
Okay, and the last one is about the deposits. What is the guidance that you are giving? Because 8.8 or something is slightly even lower than the industry level. So in the coming this quarter, assuming that you might increase your pace of fundraising, so what would be the guidance as far as deposit is concerned for FY23?
No, we have, as far as deposits are concerned, we are already, we have activated our ground level machinery for shoring up the deposits. And I'm sure we have seen it in the past also. There is some lag in terms of when we prioritize certain things, and by the time we see the results. We have already seen it in the SME book and also in the Agri book. And we are quite hopeful that we will be in a position to see very good traction as far as the deposit mobilization is also concerned. We have increased our term deposit rates in the past, in the recent past, and we are depending upon the asset liability mismatch. we are ensuring that in fact, we should have a balanced approach towards the depositors' interest. And would like to mention that our cost of resources have gone up by just about 7 basis points by adopting this kind of an approach, which has actually helped us in ensuring that the efficient operation remains the cornerstone of the bank's balance sheet.
So no guidance you're giving in terms of the year-on-year growth?
Much of it will depend upon how the economy will have normally this quarter will also get to see some kind of liquidity flowing in. So that will also give us some opportunity to shore up the deposit, but no guidance as such.
Thank you so much, Abhijit. The next question is from Mayur Shetty of the Times of India.
Thank you, sir. I had two questions. One on deposits. The preceding quarter, the increase has been only some 23,000 crore, it looks like. And the budget, they have announced a lot of savings scheme with the rates of interest that are higher than what SBI is offering right now. So what will be the strategy going forward? Will you be able to increase the deposits in the fourth quarter? And the other clarification I had was on Adani again, because last year, a year back, there was a press release saying that the Navi Mumbai financial closure was achieved with SBI underwriting the 12,000 crore loan. So is that syndicated, or is that included in this total exposure?
Yeah, it is very much included in the total exposure, and it is also syndicated. In fact, the demand for loan was much higher than what the amount was available for syndication. So it is all complete. And your first question was relating to the deposit. What you have mentioned, that the government has announced with certain schemes. We are quite mindful and we are quite cognizant of the competitor strategy in this matter. And we ensure that we should be offering the deals which are equally competitive as well. But at the same time, we are ensuring that it should not really unduly impact our cost of resources.
So do you see a pressure on margins now in the coming quarter because of?
I don't think so, because as I mentioned that even last quarters also we have increased our deposit rates, and it has resulted into the increase in cost of resources by 7 basis points. So I don't think so that based upon the kind of increase in interest rate and the amount which has come in, I don't expect that it will have any significant impact on our ability to earn NIMs or the earnings.
Thank you.
Thank you, Mayur. The next question is from Hamsini Karthik of the Hindu Business Line. Hamsini, please go ahead.
Thank you, sir. So my question is regarding a telecom company which is going through a bit of stress. There have been reports on and off that they've approached SBI for additional lending support and so on. Where exactly are we with respect to that? And does it continue to remain a standard asset in your book? That's one question. The second question is on the cost of deposits, sir. When I look at SBI's cost of deposits, it's risen a little, but in comparison to private banks, the raise is much smaller. Going forward, if the liquidity situation does remain tight, you did mention about next month being a little easy, but on a longer term basis, if it does remain tight, do you see SBI increasing rates faster than what it did in the past?
First question, as of now, that the company which you have in mind is honoring their commitments, and as far as the income recognition norms are concerned, it's a performing asset. But we are always very mindful of the stress, and wherever required, we ensure that we should start building up the provisions. That is something which I would like to mention. And second question.
So far as the bank built a provision, sir, sorry to interrupt.
See, as I mentioned, we normally don't discuss specific accounts. I'm just giving you the broad outline in terms of our strategies. So I would not like to divulge anything on that particular account. But nevertheless, as I mentioned, that we are very cognizant of the potential stress which can affect the balance sheet, and we take appropriate steps so that we keep our balance sheet insulated from any potential stress. That is one aspect. Second question is relating to as I mentioned, the cost of deposit have gone up just about 6 to 7 basis points. Going forward, much of it will depend upon how the opportunities will emerge, what will be our ability to gather deposit. As we have some elbow room available, and at the appropriate time, we'll be using that elbow room without really impairing our NIMs or the profitability levers.
Thank you, sir. One last thing, if I
Also,
may.
I must also mention that even now also we are on excess SLR, and that gives us enough, cushion for any likely increase, and we are quite comfortably placed on that particular count.
Great. What would the CET1 look like if we add back nine months of net profit to the balance sheet, sir?
It will look like somewhere around 14.52 type.
So you're ruling out a fundraise for next fiscal?
No, see, that will be the 14.52 would be the capital adequacy ratio, and CET will be more than 10%, more than 10%. And fund raise will be only when it is felt necessary. Otherwise, we would rather prefer to plow back as much of profit as possible and create value for all our stakeholders.
Thank you, sir.
Thank you, Hamsini. The next question is from Joel Rebello of the Economic Times. Joel, please go ahead.
Hi, sir. Sir, going away from Adani, I saw your profit from treasury is up pretty sharply year on year. Is there any one-off this year, or was there any one-off last year? Can you please explain?
No, there is no one-off in this. It is only
Yes.
only the yield pickup which you have seen. That is one of the reasons. And also we were having we have got some MTM gain which we have booked this quarter, which
Right.
we decided not to book last quarter for the reason that the yields were moving at a different pace, but now it has come within control, and also at the level at which we are evaluating our book, it is actually it is giving us adequate elbow room. That's how we have booked the MTM gain this quarter.
Okay.
2,000 crore.
One more thing I wanted to check was you said that gross NPA is below 1 lakh. After how long has the gross NPAs come below 1 lakh? If you could give us.
I think
any sense.
from 2016, after 2016, this is the first year when it is less than 100,000 crores. 1 lakh crores.
Thank you, Joel. The next question is from Vishwanath Nair of BQ Prime. Vishwanath, please go ahead.
Hi, sir. Good evening. Just a quick question on the Adani thing again. I'm sorry I'm bringing it up. This 0.88% that you referred to is
No,
how
not
much of...
88%, mind it is 0.88%, boss.
That's what I said, sir. 0.88%. I said
0.88%, sorry.
yes, that's right. My question is specifically, is this inclusive of disbursements or disbursements and sanctions, or is this just how much you have extended to the company at this stage or
This
the
is
group?
the outstanding exposure.
Outstanding exposure. So any sanctioned amount will be added later. I mean, in the future, whatever is disbursed.
Yeah, that happens. Yeah, as we
How
go.
much would that be? Would you be in a position to answer that?
I would not have that number, but it would not be significant. It might make it from 0.88 to, I don't know. I will not like to get into any kind of a conjecture.
Sure, sir. With respect to your slippage ratio, now it has come down if you see year on year basis, but on a sequential basis, it has inched up a little bit. Just trying to understand if this is just par for course, or is there anything
So
specific that happened
sequential
during
basis
the...
also, I would like to mention that sequentially it looks like that it is actually 3,098 crore also we have pulled back 20% of this by 31st of January. So it would be more or less at the same level where this quarter 2 was. So I think that's not an issue.
Okay. And what would your credit cost guidance be for the year?
My effort will be to keep it as low as possible. I hope that we should be in a position to maintain the level where we are as far as 31st March 23 is concerned.
All right, sir. Sure. Thanks.
Thank you, Vishwanath. The next question is from Manju AB from Indian Banking News. Manju, please go ahead. Manju, if you could please unmute yourself.
Can you hear me? Good afternoon.
Yeah, please go ahead, Manju.
I just wanted to just know, like, to reach a credit growth of 16%, what is the amount of deposit growth that you would require?
See, it is not merely the deposit. As I mentioned that we do have a treasury book also. And from there also we have got some excess SLR. We can actually pull it out from there as well. And I have already given a statement that for supporting the credit growth, deposit is not a limiting factor for us.
Okay. How much of excess SLR do you have?
Almost 3.2 trillion is our excess SLR.
Okay. And one more thing, I just wanted to clarify on the Adani loan.
Thank you, Manju. The next question is from Preeti Singh from the Bloomberg. Preeti, please go ahead.
Thanks. Can you hear me, sir?
Yeah, I can hear you. Please go ahead.
Okay, so I have two questions. One is related to Adani. I wanted to know if you've received any requests for refinance on any of the loans.
No.
So that's the first
I
one.
will answer that
No?
question right away. No.
Okay, perfect.
Yeah.
The second one is, in the coming year, what sectors do you see an uptick in capex demand from?
So I think we are quite hopeful to see good traction as far as the infrastructure sector is concerned, and which will take care of the road, ports, and as well as we hope that even iron and steel also should really see good demand. Core sector particularly, because the kind of infrastructure push which has been given in the recent budget, it will actually open up opportunities in the core sector and even in the white goods sector also, because we expect a very strong demand coming from the consumer segment, and which means that the white goods will also get a adequate boost. And tourism and hotels is the other sector, but normally they don't borrow as much from the banking system. But as an economy, yes, of course, they will become a very important subsegment of the economy. Aviation, airports, I mean, a lot of traffic is there, and there could be opportunities for us to finance some of such opportunities as well. So I think commercial real estate being one, because what we are seeing is data center is another new opportunity which is coming up. EVs and the renewables and the batteries are absolutely a greenfield area which is getting opened up. So I think multiple sectors, I am quite hopeful that we will get to see a surge in demand from all these sectors.
Can I just ask one last question? Is there anything that's causing you any worry at this point?
Not really.
Thank you.
Yeah.
Thank you, Preeti. The next question is from Falaknaz from the Asian Age. Falaknaz, please go ahead.
0.9% in absolute terms is how much?
31 lakh crore is my balance sheet, I mean loan book. So it should be somewhere around 26, 27,000.
Okay. And sir, sequentially, is there a slowdown in home loan growth?
Not at all. Rather, we are seeing that our sanctions are almost as high as about, it is up on a YOY basis by almost 24%.
I see. And sir, what's the update on IPO of SBI General Insurance?
No plans for the time being.
Okay. And sir, was there any repatriation of profits from your overseas subsidiaries?
Sorry?
Was there any repatriation of profits from your overseas subsidiaries?
No.
Thank you, sir.
Thank you, Falaknaz. We'll take the last two questions. Jinit Parmar from Moneycontrol, please go ahead.
Hi, good evening. In your results, you mentioned that you've reduced your stake in Geo Payments Bank, and even last year you said that you will be reviewing your partnership with Geo as such, Geo Payments Bank. So, any outlook and the reason as such, and what's going to happen from your end?
No, as per the original scheme of things, we were required to stay invested for 5 years, and since we are approaching towards the fifth year, we have started calibrating our steps in terms of rationalizing our exposure in this bank. It's a decision in the normal course of business.
Okay, noted. Thank you. Thanks.
Thank you, Junit. So the last question is from Ram Kumar of the Hindu Business Line. His question is, what visibility do you have on recovery from NARCL in the current quarter?
Ashwini will answer this question.
So in terms of visibility from NARCL recovery, I think the first account has just gone. So I don't think very quickly the recovery will be there. We have got the share from that account. There are some couple of smaller accounts which will go probably in the next 1 month. So we'll get some 15% from that also, which is the normal model with NARCL. The NARCL is working on a lot of other accounts, and we have got some bids where we are trying to finalize amongst the banks, the acceptance of which. So I think we should see much more happening towards the end of the quarter or maybe early next quarter.
I think I would like to add Ashwini's answer by one more statement. The fact of the matter is that the NARCL being there on the horizon has actually strengthened the ecosystem, because today when it comes to the bids which are coming from ARCs, they are more meaningful bids, and the credit of that goes to NARCL, because it's a player who has brought in a lot of discipline in that particular community, and which actually is eventually for the good of the overall system.
And which we see by the number of counter offers we have got.
The number of counter offers which you are getting from various other ARCs is also something which you have seen only after the NARCL coming on the forum.
Thank you, sir. Thank you all the participants for your time and your presence. Have a great weekend ahead.
Thank you very much.